Cool, man.
Hey everyone, welcome to Bits Bips, where we explore how crypto and macro collide one basis point at a time. I'm your host, Austin Campbell, the High Scholar of Zero Knowledge Group, here with Ram Ahluwalia, Maester of Wealth, leader and founder of Lumina, and Chris Perkins, who I believe, Chris, I have to deprecate your old intro, and you have some news for us about a spinoff, but we'll get to that in just a moment. And then finally, today we're joined by Daniel Ives, the Grand Herald of Technology at Wedbush, but more importantly, currently on the run from a group of anti-AI skeptics, so coming to us from a vehicle in an undisclosed location. So we're here to discuss the latest stories in the worlds of crypto and macro. Just remember that nothing we say here is investment advice. Check unchainedcrypto.com, Bits and Bips, for more disclosures. And first, a word from one of our sponsors who make this show possible.
Are you a builder who needs to add on-chain trading to your product? The Uniswap Trading API from Uniswap Labs offers plug-and-play access to some of the deepest liquidity in crypto. It's on-chain execution at an enterprise level. More liquidity, less complexity. Visit hub.uniswap.org to learn more.
So I think we need to start today with the Federal Reserve and the news of an ongoing spat between the Federal Reserve and the administration and the market reaction. So to lay out the facts, news broke over the weekend that there have been subpoenas to the Federal Reserve about their renovation project and potentially Chair Powell's testimony in front of Congress about this topic. I want to be clear, President Trump himself claimed to have no knowledge of this. However, Chair Powell then came out with a video saying that this was essentially a pretext to try to influence the Fed's monetary independence. And from there, we saw some market reactions. So stocks honestly either appear to have ignored this or think that eroding Fed independence would be a positive for the markets. But gold was up, Bitcoin was up, and there have been a lot of discussions on Twitter about this. We've seen some of the Fed watchers and whispers speaking up, some people in the administration. But before we get too granular on any of that, I wanted to just start by throwing it to the group. And I'll start, Ram, with you. What did you make of this whole thing? What's going on?
I thought it was unfortunate. It's economic populism on steroids. You take this together with, hey, let's cap credit card interest rates at 10%. And Trump is running to the left of Bernie Sanders, and he's alongside Elizabeth Warren, at least on these two issues. You throw in, hey, let's buy $200 billion of MBS, which is a Bernanke-Obama policy. These are ultimately inflationary policies, not in the near term, but they are inflationary. They're inflationary for asset prices, and they're also inflationary for commodity prices. And that's why you're seeing gold and silver and uranium and copper go up and to the right. And it's all driven by midterms. I don't like the pressure on the Federal Reserve. It's important that the Federal Reserve remain independent. Bond investors are going to start demanding higher long-term real rates. So, that's my view on the matter. Overall, I wasn't happy with it.
Chris, what do you think?
So, whether you like it or not at that level, you're political. And they try to keep it apolitical, but its politics seem to be everywhere. President Trump seems to be on offense right now, and I think Ram is exactly right. Midterms are on his mind. He's moving very quick and to try to accelerate and appeal to his populist base. This is coming on the back of Venezuela, where he really asserted himself in a material way. And yet we should talk about inflation, because right now it feels like inflation seems under control. It seems like now, if anything, perhaps Powell is going to push back on lowering rates, even if it was like, maybe I should have lowered rates, or maybe the Fed should be lowering rates. Maybe I don't want to do it now because it's going to look like I'm caving to the big man. So that may be working against us a little bit. At the same time, you have a couple of big things in play that may be able to keep inflation in check. You got the AI narrative, which we think is going to be very disinflationary over time. We should talk about that. Maybe Austin, you were talking about maybe some exceptions to that, but generally speaking, from a macro perspective, that's our belief. I think that's the common belief. Massive disinflationary force. And then you got the whole Venezuela stuff up against the backdrop, right? Where, to the extent we start, quote, controlling the oil in the Western Hemisphere, does that keep fuel prices low? Does that help the inflation narrative, all pushing for lower rates? Look, against this backdrop, dollar's weakening, Bitcoin responded favorably. The one thing that we've also noticed is that Bitcoin isn't quite digital gold yet. It's a risk asset, and it's very, very sensitive to the behavior of the Fed. But yeah, I think there's a lot going on everywhere right now. It's hard to put it all together.
Danny, what did you make of the Fed news and the administration?
I mean, look, I just think this continues to be kind of a soap opera that I think investors are almost just shrugging off. Realistically, just the given, any sort of criminal inquiry is not going to result in anything. And I think that's why you saw market ended up. And, to some extent, I think right now investors are kind of looking past this to see, okay, obviously you have a few interest rate sort of cuts, that we're going to see, but it's really who's going to be the replacement. A dove's going to come in, and that's going to be bullish, I think, for stocks in 2026.
So, as I was looking at this, I started digging up some news and also encountered a few interesting tidbits here. One is that I believe this action has caused the odds of Powell being removed before mid-May actually to drop. It's like 13% now. And in a similar vein, I saw that Senator Tillis said he's going to put a hold on any sort of, call it, progression of other candidates until this matter with the Federal Reserve is resolved. Chris, I think you're right. As a result, this may be, President Trump may be trying to play offense, having the counter-intended effect here. And I think one of the other things that people outside the Fed maybe don't understand is how Powell is perceived within the Fed, and so how it takes sort of like a different view of what's going on here. A good example, so a friend of mine is Bob Bench, and he tells a story. Bob is the guy who led Project Hamilton at the Fed, about Chair Powell wanting to get up to speed on both, and commissioned an internal report, which, to be clear, is like 50 to 75 pages, dense, diagrams, writing, all of that. Apparently, Powell got this on a Monday, shows up DC to Boston Amtrak in the morning with a backpack and 2 binders with the whole report just fully highlighted, grills people for 8 hours on the thing, unprompted, and then just goes home on the Amtrak same day. Right? So you're talking about a guy who's perceived within the Fed as a workhorse and somebody who's relatively unpolitical. What I worry about as a result is we've kind of been in this Rorschach test of a market where various presidents at the Fed and people on the board can kind of pull from the market what they want. Because to the AI thing, Chris, which you were referencing earlier, you could make an argument that there's going to be significant deflationary pressure in parts of the economy from AI, but we're also now seeing inflationary pressure from AI. If you look at things like RAM prices, GPU prices, and the likely knock-on effect, I think this just entrenches people in their views. Like JP Morgan is out now saying that they expect less rate cuts. So I'm curious if this is a little bit of an own goal as we move forward.
It seems like it depends where, right? Like labor markets benefit from AI and productivity growth. So you're going to see less inflation there. But commodity prices benefit when the dollar declines, and AI can't fix that. And ever since the trade wars of last year, the safety trade has been gold, not the bond. And international value stocks are running circles around U.S. markets. I agree with Dan's point. I think ultimately it's a bullish risk assets, and markets are looking past this or discounting what Trump is saying. They're saying he doesn't have the congressional authority. Still, though, it does impact positioning. On the margin, investors saying, I'm going to go buy emerging market stocks. I'm going to go buy South Korea, Mexico, Brazil, Canada, France, Germany, UK. All of them are outperforming the U.S. markets, and not by a little.
And they're also going to buy Bitcoin and gold, right?
Well, China certainly is, right? China's buying the first one. Middle East buying the second.
Well, so are Korean corporations. They turned on buying crypto again this week, which is another bullish factor. Yeah. Dan, what do you take? What's your take on Austin's belief that there's inflationary pressures due to AI?
Oh, I mean, look, if I think about it today, there's probably about $5 billion, give or take, just from tariffs in terms of the increase that we've seen on the build-out data centers. Look, when you look at DRAM pricing and what we see across the board, there's definitely inflationary pressures. I mean, it's a memory super cycle that's going on. We see that from SK to SanDisk across the board. Look, I think right now it comes down to like inflationary versus growth. And AI is such a big part of this economy and the CapEx build out. Companies are basically like, they're willing to pay a bit up because that's what they need to do in terms of their, in terms of the build out that we see in this fourth industrial revolution.
It's an interesting point because one of the things, back to Ram's earlier comment about economic populism, that the administration seems to believe here is we can run it a little bit hot on the inflation side if we run it much hotter on the growth side. And so, it's something that people forget is we're always kind of in a race between inflation and GDP. These things don't exist in a vacuum. And I guess the question, if you will, that's driving a lot of that view is how big do we think the productivity gains from AI are going to be? And in fairness to the bull case here, as we look at this, you are seeing more and more people on, call it the non-technical side of things, starting to get sort of the punchline with AI. Like, to take another person from the crypto space, Mike Dudas was on Twitter today talking about, I get that coders think AI is like something of a big deal, but let me tell you, it's a much bigger deal to me because I couldn't code at all before. And now I can use this thing and start making stuff for myself. And it's like the immediacy of it is something I think some people are starting to grapple with. Another good example of that. Go ahead.
I would also just add too, look, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. And that's another thing that's playing out here too, with it's U.S. companies from NVIDIA to Microsoft to Palantir that are kind of dictating the AI revolution. But, to Ram's point, energy is the biggest constraint in the U.S. and price points are going up, right? In terms of just memory and just capacity. So that's probably something that, those are some of the biggest push and takes as you look at what's happening right now, especially in the tech world.
So I actually have a question for the group. I wasn't planning on going this way, but I am going to take the detour here since Danny asked a very interesting question. The energy bottleneck. What are we like? Let's take the bull case for AI. Let's say that we're going to build out more data centers, that we're going to solve some of the capacity bottlenecks for hardware, and that we're going to be able to drive very significant productivity growth. Wouldn't that in the current world just cause energy prices in a lot of places to go vertical? And if that's true, what are we going to do to build out more capacity? Like, what is the actual solution over, call it, the next 2 years?
We're going to invade Venezuela, take 300 million billion barrels of oil, and then we're gonna refine it, and we're gonna protect it, and then that's what we're gonna do. All joking aside, I mean, maybe that's part of the thesis. But beyond that, like, we do have other, like, nuclear. I mean, one of the constraints, I remember after SBF blew up, right? I remember I was talking to a good friend of mine, Chris Giancarlo, and he's like, oh man, I hope this is not the 3 Mile Island moment for crypto. And which, if you guys remember, it wasn't a nothing burger, but like nobody died, but there was an issue in 3 Mile Island. It freaked everybody out. And we overregulated nuclear into non-existence, for decades, right? Thank God SBF was not the 3 Mile Island moment for crypto. We've come back. I think we've got a really wonderful regulatory setting right now. I mean, we'll talk about that later. But I think the same set the same thing's happening in nuclear land. I think we're finally getting to the point. Like, I'm an old Navy guy, right? Like, we put nuclear reactors in our submarines and everyone sleeps around them. We've mastered this technology. We're only getting better as you look at modularization. And so to me, what's holding us back is regulation. And like that's the way to solve it. I think that's how we, and of course, yeah, you've got solar and other stuff. Nuclear, in my mind, is the way to go.
100%. I just want to say, and I want to get Ram, see what you think, but like, to me, nuclear continues to be, that's going to be the answer. I mean, obviously nuclear fission, fusion, I believe fusion could be significant, as we see playing out. But right now, look, China's ahead of the U.S. when it comes to energy. 3% of U.S. companies have gone down the AI path. When you get to 20%, you don't have enough energy. Nuclear, I wouldn't call it a crisis, but to me, this is just a very, very important moment in terms of build out of nuclear in the U.S.
Yeah, no, I agree. I mean, nuclear is the only way. The issue is that the execution timeline is measured in years, and there's no near-term impact. There's no near-term impact. We don't know how to do small modular reactors. They're still not in my backyard. Concerns and issues. China's still way ahead on nuclear. So I don't know. My own view is that it's the right answer, but hype is ahead of reality, and that matters. I mean, what's priced in is above expectation. We've seen this before, right? Biotechnology will be enriched through AI. Biotechnology was also enriched when Craig Venter decoded the genome. We had a 2-year bubble, and then asset price went nowhere for 15, 20 years, right? So like, I'm a big believer in AI productivity. I just don't see tangible results in nuclear that drive earnings. I see prices that are high relative to expectation. Everyone's talking about it now. I think it was a great trade a year ago, a year and a half ago. I was in that trade a year and a half ago and a year ago. I'm out of it now. I've sold my nuclear positions at this point.
Yeah, well, let's go back to geopolitics, right? I was joking about Venezuela. There's something going on in Iran too that people, for some reason aren't talking about as much. That's a really big deal when it comes to energy prices. If you can get that regime back into the market in a responsible way, that should also be very, very beneficial. But I think this administration is definitely focused on. We talked about it with Peter Scheer last week, right? ProSec, securing the resources needed for the U.S. to sustain itself, and I think that's really been driving our foreign policy, and I think it's going to continue to do so.
I would also. Oh, go ahead.
No, I mean, look, if you just look at a few of these charts like Cameco, CCJ, or URA, I mean, they're starting to look like double tops, and there's a lot of high beta and parabolic activity. Like when I see that, I'm looking for rotations. I'm looking like, okay, everyone's on the same side of the boat. What side of the boat are they not on? I think they're interesting angles. I'd love to get your take, Dan, on like liquid natural gas. That's near term.
No,
it's real. Go ahead.
Mm-hmm. No, I agree. I think you're making a great point in terms of like, see, I can almost make a point that like energy is going to, like, when you think about one of the best AI trades this year, I think you could argue energy, which would include natural gas, but is going to be a huge part of what I view as the AI trade this year.
100%. That's real. It's tangible. Elon Musk data centers fueled by natural gas.
Yep.
We have it in abundant supply. We know how to do it. How are you expressing that? Are you looking at like midstream plays, or how do you, or is it the commodity, or how would you look at that?
I mean, I view it as commodities, midstream plays, and then there's also a basket in there with like G, Vernova, and some others. I think like then you think about like iron, like that's one of our, like, even though it's a crypto mining, we like that one. See, to me, the best way to think about it is more of a basket on the energy side is the best way to play it. But I think like the natural gas players are going to be they're going to be key players as this all plays out.
I think a lot of the difficulty of the energy theme is figuring out demand versus supply timelines. Right, Ram, exactly as you were saying, like Nuclear has been so slow. I know Elon Musk is very bullish on solar in the medium to long term, but that's not immediate. China's built a lot of capacity there, but it's not immediate, right? Like all of this takes picks and shovels to get done. And so part of what I'm sort of looking at as we look at this and we look at the forward trajectory to bring it all the way back to the Fed is a little bit of like the call it demand leading supply, which is going to cause a spike and then a significant downtrend over time as people build out, people build out, people build out. We may see the same thing at RAM. We may say the same thing at other sorts of computer parts. Like all of these, if we're talking about a real infrastructural build out, will have that behavioral pattern.
Well, I just want to say that was like when I was at CES last week in Vegas, that was a big question whether it's like, remember everything embedded AI, whether it's PCs, health, glasses, it's about rising prices, right? And so the reality is that it's something where this is all playing out in real time, especially at the same time that you're trying to embed all this technology into consumer devices that are going to launch.
How do you see that playing out with inflation on that angle, right? You say, also mentioned that HBM memory is spiking, like 200%
DRAM
prices.
pricing.
And you need that memory, right? DRAM, it's in every single smartphone. And now you see this AI PC cycle starting.
Yeah.
You're seeing Microsoft Windows 11 retire. There's a new Windows cycle coming online. So how does this play out? So the one is like the impact to Micron, SK Hynix, the memory manufacturers. Then there's the supply chain behind them, like Lam Research and KLAC and Applied Materials. And then you got the PC players and the smartphone players that use memory as an input cost, but maybe they're going to benefit from people that want AI devices. How do you see winners and losers kind of shaking out there? Especially given that Micron's also ran up a bit, and yeah, go ahead.
I think Micron's still cheap. I mean, I think like Micron, SanDisk, SK Hynix. I think it's a memory super cycle. So I'm not a believer.
We own Micron, I'm with you on that.
But I can argue that Micron's cheap and has 50% upside this year. When some say, oh, that had a huge run, I think there's 4 or 5 core suppliers, and that's not going to change. Look, I think you're going to have some absorption of costs among maybe PC, some of the smartphone players. Apple's going to have to increase prices on iPhone 18 by at least $100 per phone. So you're going to have to, I think you play it on the picks and shovels, like the memory players, the Lam Research, and I think that the memory super cycle is going to continue to play out in 26. PCs could get squeezed from a margin because I think some of the biggest worry is like gross margin compression on PCs, on smartphone players, on some that are kind of midstream in the supply chain. Look, and that's a big variable as this all plays out.
Go ahead.
I agree with you on Micron, and I own it. But I look at names like Lam Research. These things have never been more expensive, like 45 times earnings. Obviously, the market is saying, "Hey, well, look, earnings growth is going to go higher, so watch that multiple come down." I don't know. I just can't. I can't get there.
No, I seriously know. See, my view is that it's 45 times, but it's probably more like low 30s relative to what numbers are going to be. And we've never been in a memory super cycle like this that probably goes on until 2027.
Danny, beyond CES, would love to know like any major themes that you came away with from there. That's going to impact the macro landscape or even crypto.
Yeah, CES going there 25 years, whatever. It's like this wasn't about flying drones and talking refrigerators. This is something where it's about physical AI that's really coming when it comes to robotics, when it comes to autonomous. I thought robotics to me was really the most fascinating in terms of the advancements we're seeing. I think served robotics would be a good example. Some of the humanoid stuff from Figure AI that we've talked about. I think as it relates to just crypto and just my overall view is that, look, we're in a fourth industrial revolution playing out. Physical AI is here. I think it's going to be bullish for blockchain ultimately, especially as it plays out on the robotic side. And I think more and more investors are going to recognize that the consumer AI revolution is just starting to come. Enterprise AI revolution's been there, NVIDIA, Microsoft, hyperscalers, Palantir. Consumer AI revolution now comes. Why do you think Apple's partnering with Google? This is going to be the start of many coming to the smartphone in terms of they're going to launch their true, AI model now to, the 1.5 billion iPhones.
I
How do you
also
see the
think that's
competition taking out? Sorry, go ahead.
Yeah, Ram, what did you say?
How do you see this playing out between NVIDIA and Tesla, right? So NVIDIA is making a bid for autonomous driving vehicles, which is Tesla's home court. NVIDIA is obviously taking picks and shovels play. Tesla is on humanoids, but everyone sees that opportunity too. How do you see the shakeout between these two players?
Well, first, I think Tesla's playing a different game. I think 80% of the autonomous market they're ultimately going to own. Like, I believe this is going to be a robotaxi is going to be in 30 cities. I also think Trump signs an executive order probably in the next 4 to 6 weeks about autonomous going away from states to federal, and that's very important from a regulatory perspective. But look, NVIDIA, they're going to be an end-to-end on some OEMs. They're obviously a partner of Tesla, but you could argue a competitor. But they're going to be and the initial reaction to Tesla stock was down when NVIDIA, when Jensen talked about everything. See, I disagree. I want NVIDIA involved in autonomous. Like, I want Jensen involved in it. This is not just about Tesla. So I actually thought it was actually bullish for physical AI, bullish for autonomous. But I still believe at the end of the day, the winner when it comes to physical AI, there's two. It's Tesla and NVIDIA.
NVIDIA's got 25 times forward earnings. Tesla's at 200 plus. I mean, it's easier
NVIDIA's a table pounder. Look, NVIDIA's stock where it is today is, I view as basically like it's one of the biggest disconnects that investors are only valuing the data center piece for NVIDIA. They're not valuing physical AI. They're not valuing sovereign, which is why I think 250 to 275 is the right price.
So can we double click on OpenAI? I'm happy to frame it up for folks. Like
circular financing and stuff.
Yeah, look, I don't think there's a bubble, but I do think OpenAI is a bubble. Let me make the case, and I'd love to get your downstream kind of analysis there. So OpenAI is raising money at an $850 billion valuation. They've got to raise $100 billion. They want to get it done this quarter. I expect they'll be successful at that, but they need to keep funding the machine, right? There was an interview that the CEO of OpenAI had with Brad Gerstner, Altimeter, and he described it. They've got $1 trillion in committed obligations. The group in New York, committed obligations also means debt. You have an obligation to pay. And Oracle has got over $100 billion in revenue performance obligations. That means contractual commitments from OpenAI. So there's this ecosystem that's built on top of OpenAI, and the music keeps playing so long as OpenAI can raise the funds. If they can raise the funds, then of that $100 billion, $75 billion goes to NVIDIA, call it on average. NVIDIA's profit margin 75%. So you have $50 billion in net income on a trailing PE of 45, which is $2 trillion is hanging on this $100 billion investment. Mm-hmm. So look, I think they get it done, but beyond that, there are limits, right? They have to do an IPO by necessity, it seems to me. It seems like they have no choice because they've got to feed the machine. And when markets see that OpenAI can no longer raise financing, then I think the semiconductor game is done. That's my view. But
Yeah.
what's your take? Where am I wrong?
No, and that's like the Michael Burry view. Yeah, I mean, my view is just kind of like covering tech stocks since the late 90s. Like I've seen all types of cycles, right? Vendor financing, back.com bubble burst to where we are today. See, I get what you're talking about, and it's a great argument. My view is you're building out a new economy, and you're basically in the second, third inning. OpenAI, NVIDIA, obviously AMD are going to be clearly huge foundationally parts of it. My view of what OpenAI is doing is that, look, if I believe that they're going to ultimately monetize 20% of the 45 trillion that's spent over the next few years, then I believe like they're able to pay their bills. It's like I believe like they're good for their trillion. Now, is there some of that could go by the wayside? Yes. But it goes to my view, like Oracle, I've talked about it. Like it's been a table pounder the last few months. Like, and if you start talking about CDS spreads because two dudes in their basement are trading with each other, and that's where you're going on the liquidity, I just view it as like Oracle is one, like their growth going from 17% to 30% to 50%. Now, look, could some of that go away? Yeah. But that's why that one, like, you just watch Oracle as a stock. Like, I think Oracle is stock that ends the year 275. Like,
Well,
so that's one on a large cap, one that I really like.
well, CoreWeave's got the NVIDIA put though, right? NVIDIA said we will take on whatever excess capacity
100%.
CoreWeave has, and NVIDIA is a much better counterparty than OpenAI. You don't have to bet on the come with NVIDIA. So
No, but you raise a great point, and I think it speaks to my point. Like, they're going to have to go public by 2027. They're going to raise $100 billion, and they probably raise another 50 to 100 billion after that in the final round. But the too big to fail, that's going to continue to kind of be that like ghost that's in the closet nervousness, like for the sector. But look, it's like they're going to have to prove it. That's what, right? I mean,
I think you're right. I really love the discussion. One last point here / question is, on OpenAI, they're charging fees to generate revenue. Google has a freemium model. They don't charge for Gmail. They don't charge for search. It's an ad-driven model. They know how pixel and digital marketing works. Meta's also entering the game with Llama, and it's a freemium model. They have existing distribution. They don't want OpenAI to have a seat at the table. How does OpenAI fund their commitments in a world where the cost of inference and the cost of services goes to zero?
But see, my view of OpenAI, everything they're doing is they're building out an end-to-end stack from chips to application to consumer to ultimately devices. So like where OpenAI is today, I view them as a much different company 18 months, 24 months. Like it's no different than like Amazon starting off as an online bookstore. So it's like, it's great points. I just believe when you look at what the model is going to look like for OpenAI and the reason they're able to raise this, I believe it's going to be the 100 billion at this valuation because investors are looking onto the other side of it. But look, to your point, OpenAI is going to have to prove it this year.
Yeah, NVIDIA has other sources of demand, as you pointed out, like sovereign AI. The demand for NVIDIA GPUs is strong. I fully agree. OpenAI is making bets that don't have product market fit.
They're making bets.
They've got the sell me this pen story. No one wanted the pen. No one wants a pen. I just got a pair of Google Pixel headphones at Best Buy. They automatically integrate with Gemini. AirPods work. Like that form factor works. They're already there. They've met the market where the market has need. Anyway, I spoke my piece. Austin,
and also, I'm gonna go now because I just want to say,
Danny, Chris has a question for you before you go. Then
what's up, man?
I just want to ask real quick about WorldCoin. So Sam hasn't been that. Obviously Sam has WorldCoin. He has OpenAI. What's your view? Obviously, you're the chairman of Orbs. Just would love to get your thoughts about the role of crypto and AI coming together in that capacity.
I mean, that's why we're doing Orbs, because to me, it's the intersection of AI and crypto. I mean, that's what WorldCoin is. to some extent, like with Sam, and you've seen him more active with Gap, and he's been with Alex and some of the, I mean, he's a huge believer in WorldCoin. Look, my view is like sometimes you build things and the market's not ready for it. When you look at WorldCoin, they built it and now the market's coming to them. Because it's my view in terms of true authentication in AI world, this is going to become an even more.
I think we're losing Danny. But it was
I
good
was
while
going
we
to say
had him.
the orbs got Danny.
It's okay. He's still on the run.
I think you said full port WorldCoin. No, I'm kidding.
Yeah, all right.
All good.
Danny, thank you very much. We appreciate you joining us.
Thank you.
All right. So on that note, I was going to say I also want to hand the ball very briefly to Chris before we go to our next ads, which is, Chris, there was a little news at Coin Fund lately, and I know you can't talk today about what is going on over there and what you'll be heading up.
Yeah, thank you it's super exciting. Yeah, my partner Seth and I announced that we're going to be spinning off. So we're going to take the Liquid Strategies new entity.
Wow.
Couldn't be more excited. So yeah, a lot more to come. Got some big plans. Special thanks to the Coin Fund guys the last 4.5 years, and onwards and upwards. So thank you.
All right. And on that note, we have one more set of ads. So we're going to go ahead and roll those. Then we'll come back and argue some more.
Hey, founders and developers. If you're looking to bring on-chain trading to your product, wallet, or platform, check out the new Uniswap Trading API from Uniswap Labs. It's your plug-and-play gateway to global on-chain liquidity. No deep crypto experience required, and no need to manage complex integrations or ongoing maintenance. With the Uniswap Trading API, you'll get enterprise-grade on-chain execution, combining both on-chain and off-chain sources for the most competitive prices. Simply put, more liquidity, less complexity. And this isn't just any API. It connects directly to the Uniswap protocol, which has securely processed over $3.3 trillion in total volume with zero hacks. So stop worrying about liquidity infrastructure and focus on building your product. Get access to the same liquidity that powers billions in swaps through one powerful API. Visit hub.uniswap.org to learn more.
Sure. Yeah, let's do that next. All right, everybody. Welcome back. As promised, we're going to argue about more things. So we're going to start with something we've argued about before, which is the Market Structure Act. So we just got news right now that the ag markup of Clarity is going to be pushed back. And the bill continues to, I'll politely say, be digested by the Senate. Like, Chris, what do you make of what's going on right now?
Oh man, we talked about this, man. It is a tough bill to pass. Genius was supposed to be easy, but we saw how difficult that was. We've talked about this. I think we're still banging our heads around a few things. The first one is obviously one of our favorite subjects, interest on stablecoins, or I shouldn't say interest, I should say rewards on stablecoins. And this has turned into a very controversial subject. The banks are back at it. They think it's not fair, and for some reason they are very much against it. My take on this one is that anytime there's a bill, there's a grand bargain. And I think that if I'm in the bank shoes, and I was for a long time, I would say, hey, I don't like this. I don't like this. It's going to hurt my loans. I'm not going to be able to take the deposits to issue loans. And so what I would say is, you know what? If we're not going to mess with these rewards, give me some relief somewhere else, lower my regulatory capital, because that there's room there. It kind of gets you to the same place. If I'm a banker, depending on my business, I may like that a lot more. And so I think that there's a deal there. But man, it's the Trump ethics things we talked about seems to be going nowhere. That seems to be a huge issue.
Well, at this point, the banks will say,
so like that's not going anywhere. And then DeFi is still out there. So look, I talked to my friends who have been in DC all week. They're like, it's cooked. I talked to the people in DC that are trying to get it done. They're like, no, it's alive. We're going to get it done. I don't know the final format of this thing, if the crypto people are going to like it or not. Maybe not. I don't know. Go ahead, Ram.
tinfoil conspiracy theory question hypothesis. Okay. So You mentioned that, hey, banks want to trade, like give us some regulatory capital relief. This cap on credit card interest rates, this threat, maybe Trump is dealing the stick instead of the carrot. Trump says, look, get behind this, get your lobbyists behind this. We're going to get this done. And I'm going to walk back this 10% stuff so your stock prices recover.
I don't know. I mean, I think that issue can be dealt with. And Austin, dying to hear your take. I think we can solve that issue. I think we can kind of figure out DeFi, but I don't know if we can figure out this maniacal focus that certain folks have on Trump and crypto, and ethics needs to be addressed. And the point that I continue to make to anyone who listens with me is, yes, let's address ethics, but let's do it for every single asset class. But like, to me, that's like, I talk to, Democratic senators or whatever. They're like, yeah, no, this Trump crypto, no, we have to fix this. So what do you think, Austin?
Yeah, if I think there are a lot of angles to deal with the banks if you want to deal with them. Yeah. One is exactly what Chris said, which is do something nice for them. The other one is do something mean, which is to say, hey, wait a minute, if you guys are telling us that your balance sheets are in such trash shape that you can't survive if we permit competition to you, actually, maybe we should start raising your reg capital, right? Like there are, again, ways to push them off of that. I would also say another thing I'm observing is I think retailers are waking up and noticing what's going on here and are going to pile in to refight the credit card debate writ large if banks aren't careful. So that one's solvable. I do think the unsolvable one is the ethics one, because the problem you're going to run into there is the Democrats seem unlikely to pass anything without the ethics restrictions about crypto. And if you say to them, well, let's address everything, I think their answer is going to be yes, right? I don't think they're going to know that. And then I think it slows everything down as you negotiate a complete ethics bill. And then you end up with something that, quite frankly, the president's going to want to veto. So do you have a 2/3 supermajority in the House and the Senate to override? Like, it's good. If nothing else, this thing is just going to grind to a halt.
Unless you carve it out, right? When we talked about modularity with Patrick Witt, the White House executive director, and we had him on, and he said, no, not at this point. I do want to talk, though, and mention that there is a difference between GSIBs, global systemically important banks, the big guys that we all know and love, and the community banks. And the community banks have been getting hammered. Their numbers continue to dwindle. I'm sorry, but it's definitely not because of stable coins, because we barely have stable coins already. The reason why they're dying is because the GSIBs are killing them. And, the way to solve that is to give them some regulatory relief that allows them to compete again, I think. At least that's what Secretary of the Treasury Bessent said when he went on the All In podcast. So I think solving the GSIB versus community bank issue should be dealt with the way it should be dealt with, not by going after stable coins.
I'm going to go one step further. Going after stable coins entrenches the GSIBs, because, like, think about it from this perspective. If you are Chase, Bank of America, Wells Fargo, Citi, you're providing to customers with medium to high balances, which are the valuable ones, like adequate to good customer service and one-stop banking for your checking, savings, brokerage, credit card, mortgage, all of it, right? Community banks cannot do that by definition with their scale. Stable coins, because of the interchangeability of them, are a way for all of them to essentially federate against the big guys. And one of the things I was irate about, I wrote something about this weekend, is that the leadership of the ICBA needs to be fired immediately, because they are essentially feeding all of their members to the big banks and getting them killed. Yeah. And again, it has nothing to do with stable coins currently, what's happening. Because, like, here's a great trivia question. What appears to be the number one growing bank in rural Michigan?
JP Morgan?
SoFi, right? The thing that's killing you is not stable coins.
Digital banking.
It is people who can meet the customers where they are and attract the new customers, right? And that is number one. The fintech banks are just housing you, and then behind them are the GSIBs, and then it's the community banks. And when you get to big cities, it's the GSIBs dominating because of their aggregated services. Nowhere in here are the community banks winning, and so every year their average customer gets 1 year older.
You're exactly right on the mark. I mean, the GSIBs, the big banks, and the fintech banks have a better customer experience because of digital banking. They have a broader product offering. And that's where the future is going. And the community banks are struggling for relevance. And it's interesting because the community banks already do have more favorable regulatory treatment. You know, they have less capital requirements. They have exemptions under Durbin around interchange income. So there are all sorts of little arbitrages set up in, like, my alma mater, Cross River, right, for example. There are all sorts of little arbitrages these banks enjoy. And so the only answer is, well, hey, look, give them even more relief. You know, if you're an entrepreneur, one of the best things you can do is help these community banks maintain long-term relevance. And one of the answers to that will be through integrations with DeFi and through things like tokenization. Those community banks can already avail themselves of modern digital banking technology, like the Encinos of the world, the nice front ends, a nice mortgage experience. That startup ecosystem's already been built out. But what hasn't been built out is like liquidity and financing and risk transfer, so they can compete and start to look like the service offering that a bigger bank presents.
Crypto's dying. Crypto's dying for borrow lend. Like, you know, all the centralized borrow lend we had last cycle is wiped out. It wasn't done right. You know, Celsius, BlockFi. You know, there is an opportunity for the people who can leverage, who are smart enough to leverage technology and lean forward. I think you're right. It's time to compete. And I think they can proliferate because the regulatory environment is going to allow it.
I would also say this is back to telling the banks, hey, be careful what you guys are lobbying for down there. Because to me, there's another obvious answer to helping the community banks out here, which is bringing back Glass-Steagall. And if I were one of the big banks, I would want to be fit. I have heard people in the Senate discussions bring this point up because they've pointed out to the community banks, your problem is that you can't compete with these like consolidated behemoths. So like the real answer is either join them or we have to break them up. But that's sort of the inevitable like future. And I'll tell you, there are many people, right, whether I think this is right or wrong, who think we have too many banks and we should have less. And that's a school of thought that should also be acknowledged here. But Ram, to your point about technology, like, great example of community banks holding themselves back. Apple Bank here in New York. There's a branch. I walk by it occasionally when I'm on walks around my house. If you look at their actual like offering, it's pretty good. It's like a checking account that pays interest. But then I go and look at their technology and it's like psychopathic. They have separate apps to manage their debit card and your bank account. Guys, what is going on here? Like, that's the stuff that needs to be fixed.
Yeah, there are incredible opportunities with these community banks if you're focused in the right area. So like Customers Bank, I'm a customer of Customers Bank. The service sucks. The bill pay sucks. The wire experience sucks. They still haven't issued me debit cards. Been there for like a year and a half. The support response sucks. The stock is up 70% in a year. It doesn't matter, right? If you're a bank, you get 10 turns of leverage from the Federal Reserve, from the FDIC Tier 1 capital requirements, and you can borrow from the Fed. You know, there are some startups like Stablecore getting after this opportunity. How do we enable banks to become stablecoin relevant, providing picks and shovel solutions? And I think if you're a community bank and you can pivot like SoFi did, SoFi acquired a community bank and they made it modern tech with digital marketing. And that was a driver of success. So there's still more of those opportunities out there.
And you're seeing partnerships of that sort too, like your friends at Cross River, like Columns, Coastal Community,
Yes.
Dart, like you can name them all. And the thing I think will start happening is if you're a medium to small bank and you don't find that sort of path, you are just going to be eaten by one of the big guys, right? Like the current pathway of do nothing is rapidly running out of rope because as the boomers age and die off, if you didn't attract new customers, you're just out of customers.
If you're a community bank owner, give me a call and focus on this topic. I've thought about this 1 or 2 times, so just let me know. Okay.
Been there, done that.
Final one before we bounce out of here today, guys. Venezuela and some of the actions around Tether. I want to bring both of these up in related fashion, call it. So as we've looked at the Maduro regime and what's gone on in Venezuela, we're looking at how deeply USDT has been embedded in the economy for oil exports, potentially for sanctions evasion. And by the way, depending on which end of that you're on, do we mean evading US sanctions or do we mean evading Venezuelan capital controls to get your money away from the regime? So let us acknowledge there are two sides to that story. But the punchline is we just saw one of the larger freezes we've ever seen of stablecoins, and we're seeing how much this was integrated into, call it a LATAM/Global South system. What do we think is going on here? Like, Chris, what's your take on these unfolding events?
I think it just goes to show that stablecoins are the most significant power, the most significant instrument of national power that you could ever imagine. More powerful maybe than any weapon that you could construct, because you have a product that's in high demand, right? Everywhere in the world, everyone wants dollars, right? And the fact that you have freeze and seize capabilities makes it very, very powerful from a position of control. Now, the power that you have is that if you don't go through proper due diligence, you're going to undermine the confidence of that currency. So as much as it's in demand right now, you can lose that demand and really undermine your currency if it's taken advantage of. And so, the question is where do the bad guys go from here? Or how do people evade from here? It's a lot harder when it's on chain, a lot harder. So it's going to be really interesting cat and mouse game going forward. One thing we didn't mention was that I'm really hopeful that market structure is going to include a white hat hacker provision that allows private citizens with licenses to go and help recover assets. But for stablecoins, you don't even need that because you just go through due process, freeze and seize. Yeah, maybe not what Satoshi had in mind when he created Bitcoin, but it is one heck of an instrument of national power.
Yes, it is. A few quick thoughts. One is this is more dollarization of emerging markets. Stablecoins are advancing U.S. Interests through national security and dollarizing emerging markets. That's one. Two is Tether's coming into the fold, right? It used to be the perception that if you want to house assets and evade the long arm of the U.S. government, you custody in Tether and not USDC. Well, hey, look, that's not true. And third, and what Chris's point is right on, is like there's a big tension around is digital assets sovereign money where you bank yourself and you have privacy and you're secured by Fourth Amendment protections against unlawful search and seizure, or is digital assets just fintech 3.0? And this is more evidence that this is fintech 3.0.
I mean, I would say, I think these two, Chris, to your point, these two visions can live side by side with each other. It may be the case that Bitcoin is the permissionless, non-interdictable currency, and that stablecoins are going to be highly interdictable, and that different sets of people will use each as preferences demand, right? To bring it all the way back to where we started, if people continually undermine a belief in the currency or a central bank, people are going to substitute to Bitcoin. So in some ways, it serves as a hedge on the worst behavior, because if the U.S. is using the powers of freeze and seize capability to interdict genuine criminal actors, I think everybody looks at that and goes, yeah, okay, man. But on the other hand, if they start using those to steal from people who they just want to tax more, or just take money because they don't like your political speech, you're going to drive people into Bitcoin.
Yeah, it's also not dissimilar to the Fed. Have you ever been in the Fed vaults down in New York City? It's incredible. If you ever get a chance, I recommend you. But yeah, that's a custodian, actually. People don't realize it's not our gold. It's other people's gold. And we hold on to it because of that trust. So to the extent that we're able to retain that spirit of trust, I mean, it's a very, very good thing.
I would agree with that. So on that note, we've been going for a while. We had a great conversation with Danny. And in closing notes, I will just remind everybody that nothing we said here was investment advice, and that we thank you for joining us for this episode of Bits and Bips. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, take care, everyone. And Chris, congratulations again.
Congrats.
Thank you, sir.